There's a bit of a green on Info Edge stock as well. The stock, of course, had seen a bit of a tumble on account of that exceptional one-time hit that the company has taken on account of impairment. But looking at the internals, we are seeing a bit of a spike on that counter, sitting with a gain of around 3%. Let's try and understand the internals. We have with us Mr. Hitesh Oberoi, the MD and CEO at Info Edge, joining us on the show. Hitesh, hi, thank you so much for making time and speaking with us. Well, the growth rate in recruitment business has tapered a bit. Of course, it's better than expectation because IT hiring was expected to impact your numbers by a whole lot. But nonetheless, do you expect this softness to continue throughout FY24?
You're right. Billing growth has taken a hit because of the slowdown in IT hiring. The non-IT hiring market continues to be solid because that's more indexed to the domestic economy, while the IT hiring market is more indexed to the US economy. And IT hiring has been slow for almost 2 quarters now. And we expect it to be slow for another 2 quarters at least. Hopefully, things will start recovering by Q3. But it's difficult to predict what's going to happen going forward. The non-IT market continues to be rock solid.
Net basis, if I could ask you, should we expect a double-digit growth in the recruitment business, 10 to 15%, or could it be single-digit?
I don't know. It's very hard to predict. IT hiring has been slowing down for a couple of quarters. The last quarter was slower than the previous quarter, so it's unclear whether we hit the bottom. Hopefully, things will get better in the second half. Internally, of course, we'll try and aim for double-digit growth, but it's hard to say how things will pan out.
Hitesh, tell me, what is this one-time exceptional loss of 97 crore rupees that you've incurred?
See, there are lots of these exceptional items because of the fact that we have a lot of investments in a lot of companies, and some of these investments are marked down. Sometimes they're marked up. So this extraordinary loss which you sort of see is perhaps mostly on account of some of these. Because, we have a lot of investments in over, 40, 50 companies, and they are often market. We sort of impaired our investment in broker network some time back. So some of these sort of things happen every quarter.
Okay. I'm just looking at the consolidated EBITDA margins as well, Hitesh, and they've also slipped down on a sequential basis, about 132 basis points. Was it the marketing that impacted your margins?
Actually, performance this year has been very, very good. Not just the recruitment business, but also the non-recruitment businesses have done well. 99acres had a solid quarter. It generated cash actually last quarter for us. Shiksha was also profitable at the cash level. It generated positive cash flow for the company. Losses in our Jeevansathi business also came down. And Naukri continues to be very, very profitable. So Naukri last year had an EBITDA margin of 62%. So margins sometimes go up and down a little bit because of our investments in marketing, and they are lumpy. But otherwise, on the whole, margins improved substantially last year and improved in Q4 as well, over last year Q4.
Improved in Q4, but what about the coming quarters, coming years? Will that trajectory of improvement continue?
A lot will depend on billing growth in Naukri. If Naukri is able to grow at 15% or more, then our margins should hold. But if growth in Naukri slows down and we start hitting single-digit growth, then, as a company, we would want to continue to invest in some of the newer areas where we see a lot of opportunity. Like we're investing in a blue-collar job board. We don't want to slow down that investment. We continue to invest aggressively in data science and machine learning and AI. We don't want to slow down that investment. We are, in the past, we've always seen that whenever there is a slowdown, these slowdowns never last for more than 2-3 quarters. And after the slowdown, you see a massive bounce back. So we're hoping that will happen this year as well. The company's cash rich. We can afford to invest. So even if the margins take a hit in the short run, we'll continue to invest. And that will only happen if Naukri growth slows down to less than 15% this year.
Anticipating a slowdown in Naukri, is that what you're saying, Hitesh?
Certainly in the first half. Certainly the first half of this year will not be very, very good. And like in Q4, our billing rate growth in Naukri slowed down to around 13.5%. And it may slow down further for a quarter or so. But we are expecting a bounce back in the second half.
I mean, it's quite interesting, and I really want to understand this, Hitesh. I mean, I understand that it's a wave of mass layoffs that we're seeing, not just in India, but across the world. I mean, I would imagine people would go seek the Naukri portal even more, right?
No, absolutely, you're right. Our job seeker traffic continues to be very, very high. And we are acquiring more users than earlier and without having to spend a lot of money on marketing. But we make our money from businesses and not job seekers. And the truth is that IT hiring at Indian IT services companies has slowed down. We are seeing reasonable hiring still with captives. Hiring at startups has slowed down, and that's where we make our revenue from. That's how we monetize companies, not job seekers.
So we understand that, but Hitesh, just trying to scratch that point further to get a better understanding, because Naukri, of course, is the mainstay. When you say there's going to be slower growth in the first half of the year, are you hinting at maybe a low single-digit growth? Could it be 5 to 10%? We're just trying to understand, because that's what the big kicker is in terms of the operating leverage.
Hard for me to say, because see, a lot of our billing happens in the third month of a quarter, right? Like we have a lot of subscriptions and accounts that are due for renewal, and the renewals happen at quarter end, and companies take a call at that point in time. See, our revenue growth may not slow down that much because we collect money in advance, and we already have a lot of deferred revenue on our balance sheet. But what I'm referring to is billing growth, right? Billing growth may slow down a little from here on as well for a few months till the IT hiring market bounces back.
About the Naukri business, but talk to us about Jeevansathi as well. Yes, maybe the losses have narrowed, but in terms of the performance, it's not very impressive, because the billings for the quarter showed another decline of 27% on a year-on-year basis.
So that's a planned decline, because we changed our model on Jeevansathi last year. We went freemium. A lot of the services which were paid for on Jeevansathi are now available for free. And we did that to acquire users and acquire market share. On that front, we are trending very well. Our traffic has grown, our monthly active user base has grown. The number of matches we are enabling on the platform has grown substantially over last year. As a result of this new model, we have managed to bring down our marketing expenditure, because our cost of acquiring users has come down, because we're attracted by the freemium proposition. So this was a planned shift. Now, hopefully this year we grow over last year, because now the base is much lower. And burn in Jeevansathi should also go down with every subsequent quarter.
Jeevansathi should go down. And just coming back to the Naukri business, I understand 125,000 unique customer with an ARPU of 110K. What could these numbers look like in FY24, broad sense?
Like I said, see, the non-IT hiring market continues to be rock solid. Sectors like banking, financial services, insurance, healthcare, engineering, construction, real estate. There's a lot of hiring happening in these sectors, and we are likely to acquire a lot of customers in these sectors. We are likely to also expand to more cities. Currently, we have operations in, let's say, about 45, 50 cities. We plan to grow the number of cities where we have physical presence in the months to come. So we should be able to acquire a lot of customers in the non-IT segments. But it's hard to say what's going to happen in IT. So ARPU should, if we are able to grow at 15% this year, then ARPU should continue to get better. But on the other hand, if growth slows down and we end up with single-digit growth in Naukri billings this year, then of course ARPU will not grow much.
More than your company, you are giving us a color on what IT sector's performance is going to be in the next few quarters. And that's not a rosy picture you're painting.
Well, let me tell you, in the past, these slowdowns have never lasted more than 2-3 quarters. And in the end, India is the solution. So when companies cut costs in the US, they outsource more jobs to India. That's what's happened every time in the past there's been a slowdown. I hope that plays out this time as well.
Investor, what's your take on Zomato's performance? I know you're not directly involved in the business. We hear that every time. But at least as an investor, you're happy with the performance, the trajectory they're taking?
No, we are happy with the trajectory in both Zomato and Policybazaar. They are trending along nicely. The results are better than at least our expectations. And both the companies are trying to get to break even as quickly as possible. So we are pretty happy with their performance.
To stay in them, or you're looking at some sort of exit anytime soon?
That's not being discussed right now. We think these are solid sort of companies to stay invested in. But who knows what's going to happen a year from now. But right now, we're not looking to exit any of these companies.
Hitesh, we'll let you go on that note. Thanks for as candidly as you could answer all of our questions. Good chatting with you.
Thank you.